tend to like this live stream stuff, by the way.
Oh, that's good.
Yeah. It's kind of raw. It's raw. It's yeah, unfiltered, right?
Yeah, yeah.
Then you've got kind of your kind of structured, produced stuff like VC stuff, but
Yeah, yeah.
yeah.
Nice.
Anyway, all right, cool. You're on the live stream. One thing people did say, yeah, intros. So, who are you again, Ben?
Intros.
We've talked so much about it, but
Uh,
anyway, you're a banker, recovering banker. Um, yeah, done angel investor, help out with Constellation DAO, all things, all things.
yeah, that sounds about right.
That sounds about right.
I like to call myself a jack of all trades, master of none.
That's always a good thing.
So, can talk about anything, but how much do I actually know? I don't
Zero,
know.
basically
Yeah,
zero.
that's why we do these live shows
Yeah,
so
that's
people kind
right.
of get the rawness, right? It's like, does this guy know what he's talking about?
Not really.
Not
Not
really.
really. Not at all. So yeah, we can talk about the podcast. So the podcast is coming out. Like you said, this is the 27th episode. I'll drop the link down in the comment section. But yeah, generally, I think you go over stable coins, you go over Bitcoin, you go over Balaji's kind of $1 million bet. You go over the rates, the rate possible rate hikes. Um, and I think there was one more thing that you kind of went into as well. U.S. Treasuries and SVB, right? Can you make the analogies like Mattel and Walmart? Who you're faulting? Is it the manufacturer or is it the distributor or the store? Yeah, and then I think he kind of ended up with kind of saying, "Hey, look, this is a at the end of the day, this is kind of I think first principles is kind of what you were saying. Everything's back to first principles. You should think about everything through first principles. And you kind of also stated it's also oftentimes good to talk through these things, right? Because I
Hmm.
guess in this fog of war, it's really difficult to kind of figure out what exactly is going on.
Yeah, I mean, it's not even fog of war, right? I think it's clouded judgment in the context of both, I would say, fear and greed at the end
Mm,
of the day, right?
right.
And one example I didn't use is like, Luna, Terra, right? I think like when you go back and really think about it, it's like, well, you were able to stake a stable coin at like a 20% yield.
Mm,
And as good as that sounded, sometimes things just sound too good to be true.
right.
And so when you think about it in that context, maybe you did not know exactly foresee like how any of this would have turned out, but you might have said, man, 20% on a stablecoin seems really high.
Right.
And you can't get that yield anywhere, right?
Right.
Especially liquid. So you're sitting there going like, huh. So if you were to somehow, I guess, like really have thought about it and said, okay, ultimately, how is this thing getting funded? I think you might have come to a very different conclusion of whether or not you would have staked, or maybe you would have, I'll call it, risk managed a bit
Right.
and said, okay, maybe I'll do it for like a week or 2 months or whatever the case may be, and say, I got to pull the trigger at some point in time based on XYZ parameters. So it's one of those things where I think the more I guess you sort of think through something on sort of like, yeah, that first principles basis, I think you could, at least come to your own conclusion. Whether or not you would avoid the pitfall is a different, but at least said, okay, I logicked it way and this is what I think. And so it's the same thing with like SVB, right? Where people are like, this is the downfall of money, fiat,
Mm,
US treasuries. This is the reason why this, SVB went down. US treasuries aren't safe.
mm,
Fiat, the system is broken. And you're sort of sitting there going like, well, really? Is
mm,
it really broken? Is it really US treasuries that are the problem?
mm,
And that's why I likened it to sort of that retailer sort of manufacturer product seller
mm,
analogy, right? Which is like, I mean, the Fed produces these treasuries, right? Or the treasury, sorry, and
mm.
people buy them. And if you are doing stuff with those treasuries that are not sort of in your favor, or you're overloading on them in a way that doesn't, that sets you up for some potential risks. I mean, whose fault is that? You
Mm-hmm.
can't blame the Fed, right?
Mm.
It's actually SVB's fault. It's like you go to the buffet, right? Like let's even break it down to something simpler. You go to a
Mm,
buffet, you
mm,
load up your plate, you eat a shit ton,
mm,
and then you gain 20 pounds. Like you blame the buffet or do you blame yourself? You know what I
right,
mean? It's
right,
like that's the way I sort of liken it.
right.
So myths like that, and then this that obviously goes into things like Bitcoin, right? And Bitcoin, I think, is like multifaceted in terms of I think the myths, but I think whether or not it's like the safest form of like money.
Mm,
Again, it's yes and no, right? As in like maybe yes because of the variety of factors, like there's less ability to inflate, right? Because it's a
mm-hmm,
fixed
mm-hmm,
supply,
mm-hmm,
it's trustless, permissionless, all these kinds of things. But at the same time, I guess it goes back to Lunaterra as well, right? When people load up on it, because then
mm,
they use it to like leverage it, and then
mm,
when things go wrong, they start selling it, and the price starts precipitously declining.
right.
And then other people are doing similar things, and everyone gets caught up. It's like, yeah, that's what happened to Terra, Luna, 3AC was a victim. I mean, everyone, right? Like
Mm,
who had loaded up on Bitcoin at that time. So uh, in and in that sense, I sort of go, yeah. I mean, look, Bitcoin is everything that you say it is, but at the same time, it's what you do with Bitcoin that will also create the potential problem, right? And so,
right,
that's a funny thing, right? When like everything went down with Luna Terra and everyone else went down, it's like no one blamed Bitcoin.
right,
You know what I
right,
mean?
right,
And I think it's probably because there's no one behind Bitcoin, I guess. But
right,
if there were,
right.
yeah,
Yeah,
sure
they
as
were
hell,
probably
people would be
blamed.
like, yeah, someone Bitcoin's fault for whatever reason, right? So yeah, anyway, so I guess I mean, I can go through every example, but I think the point is like everything at the end of the day can be rationalized, reasoned through,
Mm,
um, because there is a source of truth. Whether or not we can see it is a different story, but and whether or not we actually find it is another story as well. But the goal is ultimately to get to the closest place you can to that source, so that you can at least make called better decisions.
and I think it's I think so there's a lot of conferences coming up right in Hong Kong.
Mm,
There's like something called FOMO. There's WOW, and I'm not going to any of them. I'm going. Well, sorry, I'm going to. I have a talk tomorrow, and then I think I told you there's another conference we're putting up together with the Bella Lee guys,
mm,
crypto drinks in May. So obviously you're invited to that one once we
thank you.
get it all set it up. Yep. Um, you're going to be a speaker as well. But the what happened in I think in the last 2 years. So I saw a lot of. I guess the reason why I'm kind of putting in this conversation is, similarly, I'm seeing the hype again in terms of events, right? Because Hong Kong is open, and so a lot of events talking about NFTs, and everyone kind of has this angle on marketing, selling something, and I guess one of the reasons why I'm actually our conference is actually going to be a lot smaller.
Mm,
I think it's gonna be called Connected Capital, and it's gonna be I think 15, 20, maybe max 40, and I think we're trying to kind of elevate the conversation because it's just I don't know it feels like in some ways we're perpetuating some of the hype again,
mm,
and there was too much hype I think for the last 2 years,
mm,
and and I think we kind of, I guess it's inevitable, but on the other hand, I guess I don't want to perpetuate it. And I think it's a little bit easier on Twitter, on social media, and especially when we couldn't meet, right? Because
mm,
that's the only thing that you could have a conversation with people that kind of had contrarian opinions, but it was just harder because you just couldn't meet. So you hang out with the
mm,
people you want to hang out with, right? Versus you meet up with your friend and your friend's like, I don't think so, right? Non-crypto
mm.
friend, right? And someone's
Yeah.
like, I don't think so. Or you meet up with your family or your friends and your non-work friends, and they're like, I don't think so. Or
Mm.
have you thought about it a little bit more? So I think that simple opportunity to meet different views, I think is very valuable. To actually, that's your kind of ending point, isn't it?
Yeah, no, absolutely. And look, this is not just crypto, right? I mean, like it's like just fundamental. Like anytime there's a hype cycle, there is something that comes out that everyone gets super excited about that's going to change the face of capitalism or whatever technology or whatever, right? I mean, let's go back to SPACs at the end of that also, right?
Mm,
SPACs were out of control. Like
mm,
so much money printed, so many, D-SPACs, right? Where companies that shouldn't have gone public went public. And then at the end of the day, like when you step back and you look at like how those things were structured,
Hmm.
yeah, I mean, at the end of the day, they were structured such that the people who started these SPACs would get an outsized return upon the time that they actually IPO'd something via
Hmm.
the vehicle.
Hmm.
And they really had no lockups, so they could
Hmm.
just sell.
So
So when you think of it from that perspective, you're like, yeah, you get an outsized return and you don't really have any lockup. And so, yeah, you are obviously incentivized to put anything out there, right? The
hmm.
only thing that's going to hold anyone back from doing anything too stupid is, quote unquote, reputational risk.
Hmm.
But, as we have seen, right? Like, look at what's his face? Chamath, right?
Hmm.
Look at like the disaster show that was in terms of all the SPACs that he put out, all the companies that he took public. Every single one of those, I mean, at least as of like a month ago or so,
Right.
they basically went, they're like, I don't know, 90% below.
That was that right.
Yeah, so they're just, it's just horrible, right? In terms of like, there are just no, um, what's the word? Yeah, there was just too much hype, right?
Hmm.
And I think that everyone was just, it's one of these things that Chuck Prince, like the former Citigroup CEO, said way back when. It's like a quote that comes up every single time there's one of these like boom busts. And I think the quote goes something along the lines of, when the music's playing, you got to keep dancing.
Hmm.
And that's just sort of, the nature of it, right? So I
Hmm.
think in that sense, these hype cycles are unavoidable, right?
Hmm.
But I think to your point around elevated conversations, I think that the problem that we've seen in hype cycles as well is that, and I think this has gotten worse over time, is sort of like if you're not with us, you're just spreading FUD, right?
Right. Right.
And
I
that
hated the
always
word.
stops conversation. Exactly.
Yeah. 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 I hated it because it was like, well, I mean, yeah. I don't know. There was a word for it. There was like truthiness. I don't know. There was a period in time when it's like the,
Mm,
the the Colbert Show, right? What is truth and what is misinformation? And
mm.
yeah, then everything was considered FUD, and I was just like, well, what? Yeah. Anyway, what is the definition of FUD, right? And what if I don't agree with it? Doesn't mean I'm against a project, but I just don't think it's true, right?
Yeah. So it's like one of these things, right? Where like the population is just too polarized, right? So having some like opposite view is like, it's either you're with us or against us.
Right.
There's no like, I'm just asking a question because I'm
Correct.
genuinely like trying to understand something. So,
Correct. Correct. Correct.
um,
Well, there used to be a middle ground, right? I think there's a kind of long history. I mean, I have a book on, the it's called Bowling Alone, right? It was
mm,
basically how in the 80s, I think there were times where basically, yeah, you had conversations between two sides, right? And
mm,
there were structures in the United States. It was about kind of sociology in the United States, but there were structures in the United States that would bring people together, right? So you had,
mm,
you work, but once you go home, you have like civic associations, right? You had what's it called? The one with the lion's crest. The title of the book is called Bowling Alone. So it was like, oh, in the Midwest, people would bowl together, right?
mm,
And so people would actually come. There would be activities for people to come together, with different kind of socioeconomic factors, different races, different jobs, and so you always had this inbuilt thing where it was forced conversation, right?
mm,
You had to meet people that were different, right? And so
mm, mm.
when that happens, there is a platform for just talking, right? Coming
Right,
coming together, right? Because you can't go bowling with a guy and suddenly get in a fight every single time because you have
right,
different views, right?
right,
So,
right.
um,
Yeah.
yeah. What switching gears a little bit because I do know
Mm.
you're on a schedule. You want to talk about Credit Suisse?
Oh, I mean,
You work
yeah,
for
look,
both.
I worked for both UBS and Credit Suisse back in the day. And look, I think like those two merging
Yeah.
is not surprising,
Okay.
especially in the context of like if one were to go down, like what would be like the most normal thing that would happen? And yes, it would be like the Swiss government would step in and they would sort of bring these two organizations together. Because at the end of the day, right, Swiss are very, especially when it comes to the banking system, right? They're very all about keeping it in the family,
Makes
I would
sense.
say.
Yeah.
So in that sense, like I just never thought of another scenario of Credit Suisse in terms of like what would happen with them if like something bad were to happen.
Right.
So it's not surprising to me, right, that the Swiss wiped out like all the Middle East money. Not surprising that they just completely like, went around the entire governance structure, no shareholder vote, merged the two entities, happens very quickly. I mean, like all of this is like absolutely not surprising,
Right.
I would say, because at the end of the day, right, the more openness you provide to the process, the more ability there is for value to sort of lead the system, right? And ultimately, if Switzerland is meant to be, the safest place on earth for your money,
Mm. Mm.
the last thing they want is like people, pulling their money out of Credit Suisse, asset manager, private bank, and trying to
Mm.
put it somewhere else, right? So they have to provide that stability, again, to keep it in the family. Now, why do I also say it's unsurprising? It's because the rumor of UBS and CS sort of coming together has been around for decades, put it that
Got it.
way.
Okay. Okay.
I mean, during
And
the
it was
financial
always UBS.
crisis,
It was always going to be
uh,
UBS.
not necessarily,
Okay.
but I think in my own mind, like now, if I look back and think about it, I would say that it is probably more logical that CS would be acquired by UBS, only
Mm.
because CS was always a bit more the rogue one,
Right.
um, in terms of, I would say, like risk appetite. Like
Okay.
even back like when I was there, like in oh oh nine, I want to say, like CS was considered one of the smallest banks in terms of balance sheet,
Mm.
but then they were considered one of the powerhouses when it came to lending or
Mm.
giving, lending out to, risky businesses,
Mm.
subprime, sub-investment grade companies. So,
Mm.
you need a balance sheet to sort of make that business work. So if you think
Sure.
about like having no balance sheet and being a powerhouse, I mean, that just tells you, right? There was definitely, I'll call it an element of risk in that business.
Right.
And obviously, as time went on, and again, this goes back to any sort of financial institution, SVB included, right? Like you need risk managers. And in an organization where, again, fear and greed is like the thematic of a bank, right?
Mm.
Especially an investment bank. Yeah, when fear's in the system, yeah, risk managers got a lot of power. But when
Mm.
greed is in the system, risk managers just get run over, right?
Mm.
So in that sense, yeah, Credit Suisse like went off the rails, right? They
Mm.
lent to all kinds of risky situations, blew themselves up, did all kinds of shady sort of activity, to get, entice clients to do X, Y, Z. And so, yeah, it just is what it is.
So
But look,
what's
all of
the
it was in service, right, to their clients to
yeah.
give them,
Well,
all kinds of products, right?
right.
And generate as much yield and fee activity as possible. But, the clients were like seeking it as well,
Right.
right? So it's like everything looks bad in hindsight, but at the time, I'm sure clients were like, look, I need that 10% paper, or I
Of
need
course.
12% paper. Like,
Of course.
where are you going to, get it to me, get it to me. So it's like,
Right.
if you're making money on commission, yeah,
Yep.
fuck, I'd do it too.
So UBS is paying 3 billion Swiss francs, 3.25 billion for Credit Suisse, about 60% less than the bank was worth when markets closed on Friday.
Mm.
Shareholders will be largely wiped out, receiving the equivalent of just 0.76 Swiss francs. So yeah, about 60%. Um, okay. Right.
I mean, the
So the
fact that,
Saudis
yeah.
also put money a
Oh,
couple months
yeah.
ago, right?
I mean, the Saudis have been supporting Credit Suisse for a long time. In
Hmm.
'08, they put money during the financial crisis. They bought in a huge amount. I mean, I think they bought other banks as well, but they definitely put a lot of money into CS. And now, they came back in during sort of this time, and now they're
Right.
about to get hosed.
Yes,
So,
right. So they will certainly get wiped. Yeah, they are. Well, at least it's not a pound or a dollar or 1 Swiss franc, right?
yeah.
So it's
Well,
at least they get some value out of it.
yeah. But I mean, this is sort of the same. I mean, think about it this way, right? CS spiraled out of control.
Hmm.
I mean, obviously they were already like cuspy, right? And they had a
Hmm.
plan to restructure and they were going
Right.
to split up the banks and
Correct.
all this stuff, right?
Correct.
But they spiraled the moment that it got announced that the Saudis weren't going to put any more money in.
Hmm.
And then it just like completely collapsed. And so now let's bring this back to like VC right now in the current environment, right? Where you got a bunch of companies who are like burning cash. They need to sort of get to the other side, right? And basically, if the existing guys go, look, we're not going to give you more money,
Right.
you sort of sealed your own fate, right? So I
Right.
think like this is the kind of environment that we're in right now, where it's like capital is not abundant, and
Hmm.
the moment that capital shuts off, it actually just means like the company's dead. because no one else is willing to give you money. Your existing guys don't want to give you money. And the existing
Right.
guys, by not putting in money, have basically said, we don't see any future here.
Yeah.
So we're going to step away. So that's kind of like the environment. I mean, it's not just venture, but it's also big companies, small companies. It's like across the board, right?
Yeah. Yeah.
So my advice, right, is like, dude, if you are a startup right now and you're in the process of raising money, like it's not a time to like be thinking about your valuation, right? It's
Yeah.
like
Totally.
take in
Just
as
get it.
much cash as you possibly can. Like this is the time. And you figure out your valuation later. So anyway.
Yeah, so just looking at the deal. So it is, I guess it is different from the SCB one in the sense that it's equity shareholders are not as much hosed, right? So that's kind of good. I guess there's some confidence in the Swiss system versus the UK system says that this is an emerging situation, you're getting hosed, totally hosed, right? So that's, and then they're buying the entire thing. And there were conversations before where the private banking side was split off, right? And then the rest of the bank, I think, was getting acquired by.
Well, they were going to be split. Like one was going
They
to
were
be
going to
CS
split.
First Boston, right?
Yes.
And they were going to go back to their old name.
Right.
And you know, the funny thing there is like First Boston. I mean, there was like two powerhouse institutions that CS acquired, right, to become the investment bank. Like they acquired First Boston, and then they acquired DLJ. And DLJ obviously was more, I'll call it up there, right, in terms of cachet. So it's funny that they went with CS First Boston versus like, I don't know, just rebrand themselves to like DLJ.
Right.
But my sense is they probably went that way because they actually used to call themselves CS First Boston or
Right.
CSFB, right?
CFFB,
So,
right.
but yeah, it's a horrible name. I would have gone DLJ, I guess is my point, because
Right.
why would you call yourself like the thing that didn't work sort of thing? But anyway,
So then,
here
and
nor
this
there.
kind of structure as well. So then depositors, private clients, they still have their money, so they still have the capital, so they're going to kind of move off or I guess they'll get transferred to UBS.
Yeah.
And then I think it was like, yeah, the private wealth side is the stronger side, right? So that's the thing that UBS wants to preserve, and the rest of the stuff, I guess, it will just get folded in or phased out by the UBS guys.
Yeah, I mean, you never know, right? I think it'll be very what's the word? I don't think necessarily it's going to be like, you know, the mothership acquiring like a colony and then sort of just hose out the colony and keep the, you know, whatever, the
Yeah.
pieces, right? I think
Yeah.
it's going, I mean, it's an investment bank at the end of the day, right? So I think they're going to look at teams and they're going to say like, who's the stronger one? Like, and then they're going to make calls, right? Around like who they're going to keep, who they're not going to keep. So I suspect it'll be a bit more, what's the word? Anyway, measured, right? In terms of
Right.
like how they put these teams together.
Right.
But on the private banking side, yeah, same thing, right? I think, you know, there's a book of clients there.
Right.
I'm sure there's going to be a tremendous amount of overlap. And then it's going to
course,
be
yeah.
like, okay, so who's the lead relationship manager, right? And then, you know, book of business may stay. I mean, some people may just leave anyway, right? Because they're gonna be like, I don't want too much like in one institution.
Right.
That's why they spread the wealth around. So who knows? But
And then
yeah,
there's also 100 billion line of credit offered by the Swiss government. Just take a look.
yeah, it's probably for their like
100 billion.
Swiss/European retail arm.
Oh,
Because,
yes.
you know, obviously, yeah,
Yes,
Credit
that's right.
Suisse is like a big investment bank out here, but
That's right.
in Switzerland, it's like a, you know,
It's a
it's like
retail.
a Bank of America.
That's right. Yeah.
Yeah.
Credit Suisse or UBS?
Both of them. They're
Both
both
of
like
them.
deposit taking
Got it.
banks
Okay.
and blah blah
But
blah. Yeah.
right. Okay. So this would be kind of the short vote of confidence
I
on the
think
retail
so.
side. Got it.
That's
right.
right.
Right. That's true. Yeah, that's right. UBS. I do know Credit Suisse. I didn't know UBS. But yes, they have extensive retail
Yeah.
operations over there. Only in Switzerland, right?
I don't know if it extends out, but it's definitely in Switzerland for sure.
Right.
So yeah.
Right. Got it. Interesting. All right. So do you think any where are we on First Republic? All the banks also. Yeah, you didn't talk about it in the podcast. I thought you were going to mention that as well.
No, I mean, there's so much to talk about, I guess. But I mean, First Republic, look, I mean, obviously the Fed put in place, I mean, they basically forced, right? All the big
That's
banks.
right.
to, like,
100
plug in
million. I think it's like
deposits.
120 million. It's like 30 million across like 4 or 5 banks. Something
Yeah,
like that.
billion.
Sorry. Yeah, billions.
Yeah.
Yes.
Yeah. So it's like, and then First Republic share price didn't respond well, right? And I think part of that is because it's a couple different reasons, I suspect. One is, you know, why have these big banks plug in deposits into, it's like, why create this like circular economy
Right.
and then create another death spiral if something were to go wrong?
Yes.
And it doesn't really like project confidence, right? That the Fed is there to like backstop the economy,
Yes.
is how it feels.
Right. I do remember that. And it was just like, but there was a relationship between basically, and I forgot the wording for unsecured deposits. There's a relationship. So the big banks obviously are secured, and then they put a lot of their stuff in these kind of smaller regional banks anyway, right? Um, I won't say it's unsecured, but I think they just get, it's a little bit riskier. I think they get better returns on the regional banks, and so there's already this kind of, I won't say house of cards, but there is this kind of relationship anyway. Is I think what I saw.
Uh, I mean, to be fair, I guess I don't really know exactly how they do like their own treasury management.
Sure.
Put it that way. But well, let's put it this way. I mean, the Fed FDIC only insures 250K, right?
Right.
So it's like I don't think these banks have enough banks out there where they're going to be able to, I'll call it, be protected.
Hmm.
I mean, I'm guessing they just park their cash, right, with the treasury. But I actually, yes, that's where they park their cash, right? They do all kinds of overnight repos and whatever. But in terms of like, yeah, that sort of circularity, I mean, yeah, it's obviously dangerous to a certain degree, right? Because you create a bit more linkage. It's the whole
Hmm.
counterparty risk thing, right? But I
Hmm.
guess in this sense, because the Fed came out and said, we're gonna, I mean, they said case by case basis. That's also why it doesn't help, right? Which is like, if they just
Hmm.
said we're going to backstop the entire banking system, then it's like fine.
Hmm.
But to like have these banks throwing $100 billion and still say it's on a case by case basis, it doesn't. I
Hmm.
mean, despite
Hmm.
like I would say like a lot of positive things there,
Hmm. Right.
there's also this like negative piece where people are just like, why even
Right.
take the risk
That's
at
right.
all?
Right. But why is the First Republic action fundamentally different from SVB? So FCB, they said we're going to crash the shareholders, crush them, and just guarantee the deposits. Here, they force the action of all the banks, right, and have them buy into the equity. First Republic.
Um, it's a very good question. I mean, I also wish that they just saved SVB as well, right? As in, like,
Yeah. Right.
I got money on the line, so it would have been nice if they didn't just
Yes,
take
Ben,
over.
just for you,
Yeah,
just for you.
yes, exactly. I feel like I was being targeted, right?
That's what I like about all the crypto pros. Oh, they hate crypto. They're just targeting us. I'm like,
Uh,
I don't know. I mean, you're not that important.
my sense is they must have done like, it's a couple different things, right? I
Yeah,
think
I'm just
SVB
looking at the
was
article as
unique.
well. You go ahead. Yeah.
Yeah, no, I just think the SVB must have been like, it was the first one, right? So they
Hmm.
needed to take control of the situation,
Hmm.
and they don't have enough time to like look at everything. So they said,
Hmm.
look, easiest way to do this is just to take it into receivership, manage it from there, and then everyone else, like, we gotta like protect, right? Is sort of the way I see it. So at the
That's
end of
fair.
the
It's
day, the
fast,
reason
right?
it's
There's no
fast,
controversy. Shareholders get
exactly,
wiped.
correct.
They
We
take the
move on,
lot
right?
the risk. Yeah. Okay.
Correct. And yeah, with Signature Bank, I don't know, right? They must have seen something there too, right?
Yes, of course.
But at the same time, yeah, does it help their story as well of like they're after crypto? Possibly. I
Yeah.
mean, I don't see like why that couldn't be part of the narrative, but I
Mm.
have to also assume that there was something wrong with Signature Bank too.
Sure.
Is my best guess. And so I think these guys were just the victims of like the first wave.
Okay. Fair
And
enough.
that's really the way to characterize it.
Because is the FDIC also stepping in for First Republic Bank, or are they saying they're just stepping in for everybody at this point?
I mean, they basically came and they said, "Yeah,
Right.
we're here, right?" They're like, "We're
Yep.
here. We understand. We're going to, support the system," but they're not saying at all costs,
Okay.
like
Right.
they
Okay.
have in the past and given the market supreme confidence, right?
Right.
They just said on a case by case basis. And so you're just like, okay.
Right. Okay.
But yeah, so if you're like, I mean, that's why I guess even now, if you're thinking about being an investor in the equity markets, right? This is
Yeah.
an interesting time to think about putting some money to work because on one hand, you could say, they may not give you that certainty, but actions tell you that they likely will. Like the Swiss government, right? They're like, at
Mm.
first they're like, we're not going to support this situation.
Mm.
And then shit went buck wild. And they're like,
Mm.
oh, just kidding. We're going to make shit happen. So my sense is like that will be a similar outcome. Now,
Mm.
the only wild card is while they may save the ecosystem, how they do it, that's now the mystery. Meaning that that is what makes it difficult
Sure. Right.
to invest, right? Because
Right.
what are they going to? They're going to take something into receivership,
Yes,
or are they
that's
going
right.
to let it continue to be public and support it some way, or
Right.
what are they going to do, right?
Yeah.
So that is the uncertainty around that you need to sort of again logic your way through, right? And
Right.
think about what do you think is the right approach? What do you
Right.
think might happen? Blah blah blah.
So I'm looking at this
Um,
4 hours ago. New York Community Bank unit agrees to buy signatures, deposits, and loans.
for $1, I bet.
For no, I think includes the purchase of about 38.4 billion of signatures assets, including loans of 20.9, purchased at a discount of 2.7 billion. So did not include digital. The acquisitions did not include 4 billion signatures digital deposits. So I think I think the equity holders are screwed, but the
Yeah,
deposits are safe, right?
yeah,
So that
yeah,
was probably orchestrated by the government.
yeah. Not surprising.
So I guess it's to your point, you just don't know what the solution might be or how if there were subsequently another kind of maybe let's say bank run or
Mm,
another kind of financial institution on the ropes, just how they will solve this particular problem
yeah.
then.
Yeah, like First Republic, who knows, right? They got the banks to put the money in, but then, if it's not going to do enough, then, the Fed might be like, all right,
Yeah.
we take it over. And then maybe you banks who put the money in, you guys just take this bank apart, take
Right.
your deposits and then take some deposits with you.
Of
And then
course.
we move on and First Republic is gone.
Right.
And then boom, shareholders hosed again, bondholders probably hosed too. It's like everyone's done. So you're like, okay.
Right. Right. You would think that they would get, if they negotiate or they ask the banks to put money in, that they'll still try to, it's worth saving, or at least there's some equity value there, right? Because it would be,
Yeah.
right? You're spreading the risk again to like five other, again, it's not huge risk, but their shareholders will say, why are we putting money in? And then it's going to crumble anyway.
You would hope, put it that way. And, that's also why, in my mind, I think this upcoming rate decision, which is in 2 days, is going to
Mm,
be it's
mm,
going to be like a non-event event where
mm,
I have to imagine there's not going to be a rate increase.
mm,
And I think that because of that, well, I mean, what the implied assistance is obviously to the banks, right? Because
mm,
then their hold to maturity securities will get a breather
mm,
in terms of going up in price. Now that being said, obviously where the 10-year yield is going, prices have probably already come back a bit. So this might either amp it up, or it might just again send some signaling, right, that the Fed
mm,
is trying to instill confidence into the system.
mm,
But I think we're there, and I talk about this in the podcast. Messaging is super important
mm,
because absent this event and absent, any of this banking crisis stuff, if the Fed, for example, came out and they started lowering rates or not increasing rates, people would have read into that man, maybe the world's ending, maybe
mm,
recession is coming, or what's happening, right?
mm,
And so then the
mm,
market might have tanked.
mm,
So it's the market is obviously they're aching for a recession right now at the
mm,
end of the day, right?
mm,
Because everyone's just tiptoeing around. They're like, man, I think there's a recession coming. There are signs that say recession is coming. They're looking for the sign, right, where they can pull the plug. But until then, obviously they're dancing to the music. But so that's why I think the Fed here is going to have to really be cautious with their
mm,
words
mm.
and their tone to not create like
Unnecessary.
unnecessary fear, right?
Mm,
So I think that's going to be pretty important. And, despite their best efforts, they may not still be able to control the outcome. I mean, obviously they
sure.
cannot, but that's that's going to be important, right? Because as we saw with Silicon Valley Bank, right? It's like stay calm is like fire.
Yeah.
So
Yeah. It's yeah, I don't know. Yeah. So we shall see. Unfortunately,
yes,
I can't. So I was in Bangkok the other day, and I was actually at the U.S. government invited me. I don't know if I told you, the Commerce
nice.
Department, and
Mm,
I was there with director chair of Milken Institute Asia Center, and he actually used to work for the Department of Treasury,
mm.
and we're supposed to kind of do a chat. I think hopefully in 2 weeks. After I wish I could get him sooner, but yeah, just all manners. Where would you stand? What do you think? What do you think about crypto? He has some interesting kind of viewpoints on crypto, actually.
Hmm.
And I want to kind of see if I can actually draw it out in a real live stream chat. But right, so I guess it's inspires some confidence, and yeah, not a total capitulation. I guess again, looking at the news, Signature Bank is now bought. SVB is not bought.
Sold in pieces will be probably how it will go down.
So there's no resolution yet, I guess.
Nope.
And then
I mean, I
first,
think they filed. So
yes, they did file. Yes,
yeah,
correct.
yeah,
They filed, but again, that's not kind of over, I guess. And then First Republic, I guess, is kind of safe for
teetering.
now. Yeah,
Yeah.
yeah. And then Credit
CS
Suisse
is
is resolved.
gone.
Right,
Yeah.
that's resolved.
So yeah. I mean, this is like, I mean, 2023 is kind of like the weirdest year because I mean, we're experiencing like multiple crashes
Yeah, I guess. Yeah,
at
that's
once, right?
right,
Like
right,
if you think about like the 2008 crisis, that was purely financial. It was
right.
like banking crisis, financial crisis, over. In this year, it's like venture capital crisis, banking crisis,
Right.
tech crisis. It's like a confluence of crises where I think part of it is just because of, I think in '08 tech wasn't as developed, right?
Sure.
So venture probably wasn't that big either. So I think now with all that's happening, right? Fast forward over 50, close to 15 years now, right? So many other industries or, call it money centers have gotten big.
Right.
And so I think it's like anything that got big over the last 15 years is effectively subject to scrutiny now because now
Mm.
everyone is like, what else got big and what else
Mm.
could come down? So, people are looking at like private credit, right?
Mm.
Where, that industry went from nearly non-existent in '08 to now being like
Mm.
multi-hundred billion, even $1 trillion, right?
Mm.
So I think people go, man, are there any hidden risks there, right? And
Mm.
it's all kinds of risks now, right? I think this banking crisis has brought up another risk that people did not even think about, right? People thought about like duration risk, they thought about credit risk, but I think no one thought about counterparty risk. Um, and
So
so I
that
think,
okay. So that
hmm,
explains that explains I guess Silvergate signature. Credit Suisse was always teetering anyway. So that maybe slightly somewhere else, but I guess First Republic signature and SVB.
SVB, yeah, yeah.
Yeah.
I think the banks were. I mean, the banks actually. I mean, SVB is very unique, actually, right? Because they got double whammied. They got hit on duration, and they got
Mm.
hit on a liquidity. I
Mm.
mean, and then obviously the related impact then became the counterparty risk
Mm.
for everyone who banked with
Sure.
SVB.
Right.
So it's like every single possible risk came into play
Right.
this year, and it's like, yeah, I mean, counterparty risk is not something people thought about since 2008. right?
Right.
Because in 2008, when banks started going under, everyone was like, who do I bank with? My
Mm.
revolving lines of credit, I got to draw
Mm.
down on them. Like it was
Mm.
like that kind of a situation. So
Mm.
yeah, we haven't seen that in a long time. And so I feel like this year is just a very interesting year in terms of blow ups because it's across the board.
Right. So okay. But going back. So
Mm,
SUB, Silicon Valley Bank, Signature, First Republic, different
mm.
issues. Tech valuations high, overextended, um, multiple lines of business, non-understanding counterparties, too many different, related counterparties as well. I don't
Mm.
know if that's technically the right word, but that's one piece. The Credit Suisse piece is they were always on the cusp anyway, and and then what precipitated that run, or at least that event, and then there's also the USDC stuff that we saw, the DPEGs, but I guess that was kind of related to SVB as well, right? Yeah, it was Circle.
Counterparty risk.
Yeah,
Yeah.
3 billion, right? That was lost in SVB somehow, perhaps.
Well, I mean, with Circle as well, right? No one's asking the question, which I'm very interested to understand as well, is like they have the same sort of issue as actually all the stable, like,
Oh yeah, they do.
money back
USDT, I think.
stable coins, right?
Yeah, the
All of them.
USDT, I think, is even in a worse position.
Well,
I
they
don't
all
quite.
own a bunch of treasuries,
They
right? So it's
do, yeah.
like
It's
if
well, at least
anyone,
USDC is
yeah.
slightly. I mean, I saw. I mean, I think we saw the balance sheet. I mean, it was like, like at least you could account for everything. USDT is you can't see it.
Well, it's not even that, right? It's just more like even if everything was legitimate, it's just the fact that there's like Silicon Valley Bank, right? Actually, they taking duration risk plus liquidity risk because
Right.
if people started redeeming,
Right.
then they got to give back the
Oh yeah.
money,
Right. Right.
and then
Right.
they got to sell
Right.
treasuries, right? That
Right.
hold to
Right.
maturity, crystallize. I mean, it's the whole thing, right? So
Yep.
I sit there and I go, I'm surprised that Peg came back as fast as it
I
did,
know. Right. It's
just given everything that's happening in the world.
yeah.
So that's why crypto is also really interesting to me. Where like I don't get how people are assessing some of the fundamentals. I mean, obviously, I'm sure there's something about the mechanic that I don't know 100%. So
So
I don't
someone
want to
could
say
really
like,
someone
yeah.
could short the market basically. But that's what you're saying.
Well, someone is shorting the market, right? As in, like, there's the fur tree guys, right? I mean, I don't think they did USDC, but I think they put a huge short on USDT.
Okay.
So, and I remember when when that news came out that they were shorting USDT, and I thought about it, I was like, you know what? That's pretty fucking genius, right? Because
Yeah.
at the end of the day, like, if the deposits really are one to one,
Yeah.
you're not losing anything
Right.
other than like some friction transaction costs. And
Right.
if it turns out that there are no deposits there, you got everything to gain, right? So your
Right.
upside is, I mean, there's like no downside to the trade, as in like it's a downside protected short, which is like, what in the world is that? Like it's a
Mm.
naked short. Sorry, it's a downside protected naked short. So you're sitting there going like, genius trade, right? And I think people probably looked at them as like they kind of laughed, or maybe they're like, oh, who knows, right? Stable coins like a dollar, why would they ever depeg or whatever? But like I think this situation shows like, yeah, stable coins can definitely depeg
Mm.
the stable coins, right? The ones that are backed, right?
Right.
Not like the algorithmic ones like
Right.
Luna,
Right.
which
They can
proved to be
certainly depeg.
broken.
Yep. Yep.
Correct. So you're sitting there going like, fuck,
The
these fur tree guys
USDC, yeah,
kill it.
USDC market cap is 5 trillion. USDT market cap is 77 billion.
But you say 5 trillion or five? You mean
Oh,
5
sorry.
billion?
It was 5 billion. Sorry, 5 billion.
Yeah, yeah.
And then
Okay, I was
USDT is
like,
77.
yeah, yeah, yeah. So yeah,
You would
man.
think. Yeah, you
You
would
would think.
think. You would think. But yeah, I guess it was, yeah, they're banking SCB. I'm just trying to equate everything together. This is unifying theory, right? So I guess,
Mm.
right. So Credit Suisse was a little bit outside the system. A little bit outside the system.
Well, I mean, Credit Suisse is like liquidity, right? As in, like they needed money to execute on the strategy,
Hmm.
and basically, money was no longer going to come in, and
Hmm.
so they actually couldn't execute on the strategy because they needed to capitalize the different businesses that were going to get spun out, right?
Hmm.
And so if you don't got money to do it, then the business can't get capitalized. And then basically you're still just that sitting duck that was in trouble. And now, if your biggest shareholder is not going to give you more money,
Right.
then yeah, you're done.
Right.
So I think it was like Credit Suisse is like liquidity, I
Yeah.
would say, is probably the
Right.
biggest challenge.
Right. But not
Um,
related to tech.
I don't think so. I mean, well, I don't know. It depends, right? How do you feel about like, I don't know, what was the company that ultimately sort of were there? I mean, it's a big black eye, right? Green something, and it was like it was a SoftBank backed, right? So I think you could argue
The
there might
wealth
have been
guys, the German ones, Wirecard.
no, not Wirecard. It
Uh,
was man, it's like green something,
oh yeah, that's right. Yeah, I know what you're going. Yeah,
I forget what it's
yeah, yeah,
called, but
that's right. The British banker.
yeah, it was something like that, right? And
Yeah,
then obviously, I mean, there was like all kinds of things that came on top of that, but it was a huge scandal black eye, right? That really sort of just put them in a tailspin, I would say.
yeah, that's true. But
Um,
you had that. Well, Credit Suisse has been like, what was it? The tiger cub, the Korean tiger
oh
cub.
yeah. Bill
Yeah, no,
Hwang,
Pelagos. Yeah.
my boy, my Korean brother who really fucked it all up.
Bill Huang. Was it Huang? Yeah, Huang.
Yeah,
Yeah,
Hwang.
Huang.
Yep.
No, but so yeah, and then I think there was the ex CEO of Santander that also like board member, and he quit like pretty quickly. There was just a lot of things back to back to back.
Yeah, they never really could get out of the hole, I would say.
Right, right.
And then this whole, splitting it apart, reorganizing, recapitalizing was like, the way to go. And then that obviously collapsed. So then it was like, okay, well, CS is done.
Yeah,
So yeah, they're more liquidity, I would say.
right. Unfortunate. Cool. Okay. Well, I
Yeah,
think that's all we got time for. Again, listeners, the link is in the section below. Please listen in to get a little bit more of the insight. But hopefully, we can do this soon again.
cool, man. Thanks for having me.
Cheers.
Cheers. Talk to you later.